Good afternoon. Today's topic of discussion is going to be going over a quick pulse on the investor market here in Las Vegas. Notice of defaults are on the decline, which is the opposite of what we've been told and what we thought we were going to see coming to this part of the year. This is Dale Snyder with the Snyder Group at Keller Williams Realty. Let's jump right into the data. All right, so first off, I just want to start with this graph here. We track the notice of defaults. Look at this here. This is from February, maybe the first, second week of February, up until about last week, roughly. You'll see that we had a spike in the middle, but as the trend shows, we've seen a drastic decrease in the amount of notice of defaults filed. Notice of default, for those of you that are not aware, that's when the bank is starting the foreclosure process on a property. If you're an investor, you want to keep a pulse on these because that's where the opportunities lie. In a marketplace like we're seeing today, it's driven by non-distressed properties where you have homeowners trying to capture the peak of the market, because we've gone up about 34% in the last year or so. And we have a lot of flip investors that are putting properties on the market. So the real only opportunity that we're seeing is in the distressed properties that are coming to the market. Another important note here is we only have about a 0.2, 0.3 month supply of inventory, $200,000 and under right now in the Las Vegas Valley. We normally see a 5 to 6 month supply of inventory. So what does that tell you? There's going to be massive competition. So if you're Let me back up. The savviest of investors right now, the hedge funds, the cash investors, they're having a very difficult time getting properties. So if you're looking at investing in our market, you need to be very patient, persistent, and find a real estate professional that really understands the investment game and listen to them. If you're not willing to do those three, then I suggest not wasting your time and not even look in our market. Sometimes I'm very direct and blunt, but, I don't want to waste anybody's time. So it's definitely a very competitive game. So one of the properties I wanted to share with you is it's in the Summerlin area. This property just hit the market. It is a short sale. You're looking at a cash-on-cash return of about 4 to 5%. This form will be in the video here. You'll see how we calculate our numbers. If you'd like to discuss that, we can go over how we calculate the cash-on-cash return. You're looking at about a 4 to 6% return on your money, not factoring in depreciation and looking at vacancy rates and rehabs, but on average, your all-in cost is about, your all-in return on investments can be about 4 to 6%. Can you get more? Yes. If you go to some of the less desired areas in the valley, you can, the higher risk, the greater return you're going to get. So we will have this property for you so you can review it. Reach out to me if you have any questions about it. So in summary, there are still some opportunities in investing in our market. That opportunity is closing. Yes, we do have inventory coming that's distressed, but the banks are inching up on the prices and the margin for the return is getting lower and lower. And the hedge funds aren't looking at the monthly cash-on-cash return. They're just looking at a place to park their money. So if you're looking at getting into the game, you need to get in quickly. You should have already been in the last year or two, and many of you that are watching this video probably have been in the market. So once again, if you would like the information on this specific property or a performance run on any other properties, just shoot me a quick note. We can get this data off to you. And make sure to like the video, follow us, share the video if you think anybody else might find value in it. Have a fantastic day.